Let me also thank the organisers for putting together this very strong programme. I did have the opportunity to look at the papers beforehand. I did. I'm not going to say I solved every equation on every page, but I did look through them, and I was super impressed. And of course, that's part of this longer-term series. It's very important, and I think it's a public good. It's not just for the ECB; there's a global public good here for that. And maybe speaking to the organisers here, I think it's the first time I've seen it on our ECB intranet. So just for the ECB staff, they converted all your technical contributions into an essay about here's why everyone in the ECB should absorb. So that was a good move. I think every conference organiser should do it, but that was helpful. So I think maybe it's helpful to give the policymaker perspective. And again, I'm not going to say every policymaker tracks this with great detail, but someone in my role as the chief economist, I do value this work. So let me give you a few applications about why this whole trend, allowing for state dependence, allowing for time-varying parameters, taking advantage of new data and so on, is so important for policy making. One basic example is in the Governing Council's strategy. So our 2025 strategy statement basically says what we think is going to drive the European economy is structural change. So whether that's geopolitics, deglobalization and so on, whether that's the green transition, whether it's the rise of automation, whether it's changes in the international financial system, all of these basically do create structural breaks in the data. I've repeatedly said here at the ECB internally that you can't really look at the euro area data as an unbroken time series. The first decade of the euro, where there was a lot of, to put it politely, interesting entry effects as people moved from different regimes into the euro with very large imbalances across the member countries. That is not the world we live in today. The crisis period from 2008, and then depending on whether you date it by events, which really went to 2015 with the Greek referendum near the end, or you could date it all the way to 2019 in terms of the lingering effect of the financial crisis, was a different regime, and I think we're in a different regime now. So what that says is state dependence, time-varying parameters and so on are, to understand the European economy is very important. When we think about the world economy, one of our recurrent issues is the role of China in the world economy is different now than it was 10 or 15 years ago. So again, everywhere I look, and this is even before I get to the pandemic and I get to the war now. And when I put all of that together, and also, by the way, in my previous life as an academic, I also had to deal with this to some extent. I mean, when I was doing my PhD in the early 90s, I was surrounded by still the growth literature, which is trying to learn something by cross-sectional regressions on country-level data. And the question is, okay, what can you learn? And how much for the future can you learn from that? So all of these questions have been around for a long time. And so broadly speaking, finding ways to partly use the well-established forecasting methods, but also being open through the use of the transformer principles of LLMs and so on, I think is important. Trying to think about embeddings. I mean, this is happening in finance, in terms of treating corporate data as embeddings of underlying representations and so on. Last week, probably they didn't, I don't know if they applied for this conference or not, but the BIS has this new Bistro time series transformer. And I know there's a rival thing here presented here. So all of these I think are important. And because essentially the question in the last week we're getting is, in what ways is 2026 similar and different to 2022? That's, you can list a lot of factors, but you can also try and, if the whole point of the transformer approach is to create a good context. So what is the context? In what way is the context now similar and different to 6 years ago? It seems like, I think very important. Let me reflect a little bit on career planning. I think the ECB up to now and into the foreseeable future relies on expert judgment of staff to create that context. So in our forecasting and so on, we don't take the model output and say that's the forecast. It's the model output plus the expert judgment of staff, saying, okay, maybe we need to scale this up, scale this down. But of course, that expert judgment can be reinforced or complemented by some of these more flexible techniques. I think one of the issues that you've talked about in these days is also using some of these new techniques to help improve how we solve models. Because again, when I look back and think of all the linearization of the models that happen, finding ways with the new techniques to fully understand the nonlinear dynamics of the models is important. I mean, I know one of the section headings in the conference is narrative, economic narrative. And in this world of big data, it remains the case that it's kind of garbage in, garbage out. You need models, macro models, to structure how we think about the world. But I think the critique of we're away from a small perturbation of the model. We need to think about the full dynamic, I think is important. So here at ECB, in terms of data, I mean, more and more there's a hopefully convergence where we have more distributional data. Often that's characterized as basically household level heterogeneity. We have some level of firm level and indeed bank level. So again, the idea with distributional accounts, finding producer cells, consumer cells, but maybe also intermediation cells in terms of the state of the local financial system and so on, I think are important. I think whoever did the project using the LLMs to create historical forecasts sounds like a very good idea. And so I think, especially for the ECB, where we have 26 years of data, again and again we go back and think about what periods in history will help us think through this issue. And again, if we have a convergence of historical text-based analysis, historical context and so on, I think that will help. Again, maybe going back to what kind of people we should have at the ECB. I mean, all of this technical work is super important, but there's clearly a complementarity between these new techniques and having people who can really ask the right questions. So being thoughtful about, what can these new techniques help us to do, which I think is important. I mean, I'm just listening to that last presentation, having looked at the papers. All of you who are working on this, you're obviously going really deep into particular issues, and we need that. Absolutely, we need that. But collectively, as a profession, and especially in the policymaking institution, and this is why maybe Michaela and the others who were involved writing up the kind of non-technical approach and so on to pull people into this, I think is helpful as well. Maybe I'll just finish with a comment on the communication issue. So definitely it's now become popular. I think the Bundesbank has it, but lots of the ECB watchers in terms of the investment banks and so on, they've now outsourced their kind of interpretation of what we say to the LLMs. So they basically say, these guys are paid a lot of money. They no longer say, well, I think they were a bit hawkish last week. They say, according to our LLM model that we've designed, the scoring system says, it was a, score X on their hawkish, dovish spectrum. And that's fine to some extent. But it's a classic, I suppose, critique of this. I mean, I would hope we still have people who add their own independent thought to the system. I am tempted, of course, every so often just to randomise the monetary policy statement, just to see see what would happen. But there is that kind of hall of mirror effect is always there in terms of, well, should we write it like that because that's what the market wants to hear? And this could get, more unstable with the situation. And then maybe, again, trying to cover the full range of what I looked through, it's an interesting question with big data. What do we learn from high-frequency data, from unstructured data, and so on? I mean, I think we do learn. So I think it was presented here the last couple of days, the faster transmission of monetary policy using the credit card data. I think that's moved everyone's priors. That's convincing. In these few weeks, the fact that the European Commission publishes a weekly oil monitor of what's happening at the fuel prices that people actually face is important. But there still remains a kind of signal noise issue, which the ideal is essentially that when we see something, it's essentially previewing what's going to show up in the national accounts over time. And some people do the homework to say, okay, this is actually a good leading indicator of what you're going to learn, in the quarterly accounts with a lag. So in other words, what I'm saying there is the ideal is kind of the big data type approach. From our point of view, from a macro point of view, needs to be seen as complementary to the national account, the regular data. If I'm working for a hedge fund, I have a different goal. It's, do I have something that gives me a 10-second edge on everyone else? But from a macro point of view, and in other words, a lot of big data investment in the private sector is nothing to do with macro. It's simply that kind of 10-second advantage issue. But from a macro point of view, some of this looks like it does provide leading indicator qualities, but not necessarily everything. So maybe with that, let me just come back to congratulating everyone on the programme and the organisers, and indeed, this is every year, Michaela, or every 2 years? So for the next ECB board member, I hope they enjoy the 14th. As a former member, I will still be paying attention. Good. Okay, thank you.
So let me just steal 1 more minute of your time for a few thanks. So first of all, I want to thank you. That inspired us with your presentation and discussion in these 2 days. We learned a lot. As Philip said, we tried also to make take out the policy implication of your work. But in these 2 days, many more came up. We should write probably another post on the intranet in the next days. I also want to thank all the people at ECB involved into the organization. So this involves DG Research, DG Economics, but also information system, communication, security, administration. So a conference like that really takes a lot of effort to be organized, and the heavy lifting wasn't done by us, the organizers, but really all the people that helped us to put together the rooms, the restaurant, and so on. But also, let me just thank Iris Bettenhäuser and Stephanie Jetten, because they really did most of the heavy lifting. So a great applause to them and to you. And see you in 2 years.